Hello, everybody. I want to do a really quick investor breakdown on a property that just came on the market today. Just explain why I think it's a good deal and a good opportunity where others may not. Yes, so I look at rentals in different ways, and obviously everybody has their own objectives and desired outcomes, cash on cash return. They want short term, long term, and they flippers. Yes, for every investor out there, there's a new way of looking at property. So one thing that I've had really good luck with, and personally, and with some of my investors, is short-term rentals. I'm sure a lot of you guys know Airbnb is kind of taken a hit in the last 6 months. There's some other competition out there, and their rates just seem really high. And I've part of different, investor groups and online communities, and across the board, I'm definitely hearing that, especially in the Portland, Hillsborough, Washington County area. The reason why I say that is there's another market out there for midterm rentals. And by midterm, I mean anywhere from 1 month to 3 months. Okay. Where you're seeing this is traveling nurses, huge, or other traveling healthcare people. I've had nurses, I've had doctors. We live in the Hillsborough, Washington County area. We're really close to Nike. We're really close to Intel and all those companies that feed, that whole complex there. So we get a lot of contract workers that are coming. Okay, and they're usually on some duration. The nurses are usually, I think they're 8 weeks to 3 months of rotations, and they're really good tenants. They're really good tenants because they're not very high utilizers on the home. They are working a lot. They get a stipend, so it's actually paid for. So just to give you a point of reference, I have a small 760 square foot 2-bedroom condo. And last year we averaged 2,500 a month, for the, of income just being generated by that. Okay. So that's awesome. So I want to kind of use that as a baseline. I actually have another house that's really close to where these ones here that you see on the screen. It's actually on 9th Street. It's just like literally a block. It's actually a little more than a block because it's different directional streets. But my point is very close to downtown, right next to a hospital. You guys, this is literally walking distance to Tualatin OHSU Hospital. Currently being rented out, my place for $3,000 a month. And that part of the reason why mine is not as high as some of the others is my particular house is in a really unique location. So I just want to throw that out there. But I think conservatively, when I look at this, I'm using my $2,500 a month number as we look at these rentals. Okay, so why is that important? Because I know, because I reached out on these homes, and I know that these homes are only renting for $1,400 and $1,500. I think 2 of them are at 14 and the others at 15. Let me just double check my breakdown sheet here. Okay. Yeah, so 2 at $1,495, 1 at 15. So they're all 1,500 essentially. Okay. Which I think is really under probably valued for rent just in general for a 2-bedroom. I know all their leases are coming up, they're expiring within the next, most of them in the next 6 months. And another one's a little bit longer than that. So I wanted just a quick breakdown of how this might look to a traditional investor in the current situation. Okay, so bear with me because this is a spreadsheet I just created. So we got 6 bedrooms. That's 2 per unit. Same thing on baths. The asking price right now is $924,500. That's your price per square foot on that. This is the approximate payment based on 25% down at a 7,125. I just ran these numbers over the weekend for another investor. 7,125 is kind of the going rate, and 25% down is the minimum. Okay, so based on that and with the current rates, you would be negative cash flow $510. All right, so not very appealing to most people unless you're looking just to park money and bank on appreciation over time, which is a strategy. I'm not going to judge it. If you called me today and said you want to buy this house and you're okay eating $500 a month, that's totally fine. Okay. Another strategy, which I, again, am suggesting that has been really successful is like future scenario of midterm rental rates. Okay. So in this particular scenario, same asking price, same interest rate and all that stuff. But instead of it being the $4,490 a month, it's $7,500, which again, I think I'm being conservative when I say $2,500 per month. Okay. So based on that little tweak right there, you're up to almost 13% cash on cash return. So that's pretty amazing. So if someone was willing to purchase it, even at full asking price, which I think there's some wiggle room there, still the opening weekend, a couple days. But if someone did want to go just based on that, and sit it, just wait for those tenants to leave, their leases expire, then you furnish it, we would be looking at a cash on cash return closer to 13%. Now, to be very clear, I'm not trying to be sneaky here. This does not include, typically with midterm rentals, you're going to have some additional expenses for utilities. You're going to have, maybe if you want to manage it yourself, like I manage all mine myself, but you might not want to, so you might have a management fee in there. So it may not be straight up, getting 7,500 in income. But again, I do believe I'm being conservative. So if we change this number to even 2,800, right, times 3, again, you're up to almost 17, 18% cash on cash return. So even if you said, I got $1,000 in carrying costs or utilities, you're still way further ahead, and you still have a huge cash on cash return. So anyway, that's my investment opportunity right now. If this property is of interest to you, please click on the link below. Above, somewhere in this, you'll see a link. And then we can get rock and rolling on this for you. All right. I hope this was helpful. If I missed anything, please let me know in the comments, and I'll be sure to respond and answer your questions. All right. Talk to you later, guys. Bye-bye.